Rahul Shah, what's your view of the consumer heading into the holiday season? We had some earnings reports from Macy's and Nordstrom's that really spooked investors. What's your view?
Well, what we do at Ideal Asset Management is we try to examine trends and try to follow those trends to make investment decisions. And as we've seen, Macy's and Nordstrom's have disappointed investors, but Amazon actually gave a good earnings report. So what we see is continued growth in e-commerce. And along those lines, we think that the consumer might actually be stronger than what the market is pricing in at the moment.
All right, well, one stock you like is FedEx. Shares of FedEx are down around 7% this year. One would think that it would be doing better considering the low prices for energy as well as a lot of employed people out there. So why don't you talk about FedEx?
Absolutely, Greg. That's a really interesting stock because if you compare it to UPS, FedEx trades at a lower valuation on a forward basis. It trades at about less than 13 times earnings, where UPS trades at over 17 times earnings. And on the 5-year estimated growth rate, analysts are expecting FedEx to deliver 14% growth and UPS to deliver 10% growth. So we think that dynamic augurs well for FedEx shareholders going forward.
And you're also a fan of Apple. Apple's only up around 5% so far this year. I would think that people are going to give a lot of Apple gifts, iPads and iPhones over the holiday season. So what's your outlook for Apple?
Absolutely, Greg. Apple represents really a blue chip, high quality, leading tech stock of the day that you can buy at a bargain basement valuation. This thing is trading at 10 times forward earnings. And if this trades at a reasonable valuation of between 15 to 20 times earnings, I think you're looking at over 50% upside in here. And at the current valuation, the downside in a worst case scenario is pretty low, probably 10 to 15%. So I think, especially at today's prices, Apple is a good place to be.
And speaking of valuation, you are also a positive on Facebook. That's trading over 30 times next year's earnings. Stocks up over 30% so far this year. Is it getting pricey now?
Absolutely, Greg. We've owned Facebook for a long time, and the thing about Facebook is they have executed extraordinarily well since it's been a public company. They've beaten analyst estimates every earnings season, and we expect that to continue going forward. The main near-term catalyst continues to be pricing of Facebook ads, and that's essentially from the dynamic that there's a limited amount of ads in the news feed, and there's overwhelming advertiser demand for those ads. So we see prices continuing to rise, which should help revenue and earnings at Facebook. And there's new video ads that will likely increase prices as well, and not to mention Instagram and WhatsApp. So for a long-term investor, 2 to 3 years, we still think there's sizable gains to be had in Facebook.
All right, well, thanks a lot, Rahul.
Thanks, Greg.
Thank you for watching The Street.